Yo, sportsbooks have started to post odds for Thursday. I say this a lot, but sometimes the best bets you're going to find are when books first post odds. That's when there's the biggest line discrepancies. So let's get into some MLB bets for tomorrow and make some money. So let's get into my bets for Thursday, April 27th, and we're going to start out looking at the OddsJam positive expected value, positive EV betting tool. And basically this tool is all possible, right? Making money sports betting is really accessible to everyone for one main reason. And it's because every sportsbook, they all try to set lines independently, right? Every single sportsbook, they all want to be unique. FanDuel wants to be unique. All these different books, they want to be unique. So they set lines independently. So what this means to you as a sharp sports bettor, if you want to make money, is you want to get as many sportsbook accounts as possible, right? Fliff has different odds from FoxBet, has different odds from Pinnacle, has different odds from SBK. So getting more sports books, because all these books set lines independently, you never know where the value is going to be on a given day. So more sports books ultimately means more profitable betting opportunities, means more money in your pocket, right? Sometimes there's a lot of value on Fliff, so we'll go through this play here in a second on Fliff. In some plays, some days, I apologize, there's more plays on FanDuel, right? So the more sports books you have, the better. And I'm just showing you, I'm currently in New York, so, different locations have different sports books, so you may have different books accessible to you, but the same concepts that we're going to discuss apply to betting on any sports book. So essentially, because books set lines independently, it may not seem like a big deal, but as a sharp sports bettor, what that means is you essentially have dozens of data points, right? You can see tons of sports books posting odds on the Cardinals-Giants game, so we essentially have dozens of data points telling us where a line should be set, right? So sportsbooks make money by charging a spread called the VIG. So if you look here at Pinnacle is known to be the sharpest, the smartest sportsbook in the world, is they have the under at plus 167, the over at minus 192. So they have a 25-cent spread. So I can zoom in a bit. They have a 25-cent spread baked into their market. This is how sportsbooks make money, right? If you think about a car dealer or a stockbroker, what do? They make markets, right? A stockbroker will say, hey, I'll buy this stock for $10, I'll sell it for $11. That's how they make money. They say, hey, I'll buy this stock for $10, I'll sell it for $11. They make money by charging that spread. They try to buy stocks from people who want to sell for $10, they take on the risk, then they try to flip it for $11. That's how they make money. And it's no different on sportsbooks, right? Sportsbooks want to get equal balanced amounts of action on the over and the under so they can make that risk-free spread. And in Pinnacle's case, they have a 25-cent spread. You'll see some sports books like North Star Bets, they have a lot bigger of a spread. They're baking 55 cents of juice or VIG into their market, right? So long story short, sportsbooks make money by charging a spread. So what we want to do to get the fair odds or the fair value is you want to remove the spread. You want to remove the VIG. So this calculator, it's literally the core of sports betting, right? The point of these videos, I obviously want to give you guys profitable picks, but a big part of these videos is to really explain sharp sports betting because it's not that complicated. It requires work, right? Placing bets, it requires work, it requires hustle, but you can absolutely make big profit sports betting if you understand the concepts, right? So we know books, they make money by charging a spread. So what you want to do to get the fair price, what should the odds be without the spread, without the VIG, is you want to use a VIG remover, right? Or a no VIG odds calculator, as it's called. This is also called a true odds calculator, a fair odds calculator. There's different terms for it, but all this does is it strips out the VIG from a sportsbook's market. So in the same way, right, if a stockbroker says, I'll buy this stock for $10 and they're selling it for $11, well, what you know is they think the stock is worth between $10 and $11. If a stockbroker says, hey, I'm buying this stock for $10, I'm selling it at $11, there's a $1 spread, right? 10 between 11. So you know they think that stock is worth between $10 and $11, probably close to the midpoint, which would be $10.50, right? That would be the fair price. You're removing the spread. If someone says, hey, if a stockbroker says, I'll buy this for 10, I'll sell it for 11, they probably think the midpoint, 10.50, is the fair price of the stock. So this may take a second to wrap your head around, so I highly recommend reading through the text on this no VIG odds calculator. But you can see right here, Pinnacle, they have a 25-cent spread in their market. So what we can do is we can strip out that VIG, and you'll see the fair price with the VIG removed is plus 175.56 on the under, right? So this is a market with no spread, no VIG, right? It's kind of like a stockbroker. If they were like, hey, I'll buy this stock for $10.50, I'll sell it for $10.50. Or a car dealer who buys your car for $10,000 and then goes and sells it to someone for $10,000, right? It wouldn't make sense, but that's the fair price with the spread removed. So what we do, because all these books set lines independently, is essentially you have dozens of fair values for what the fair odds are on a bet. So Pinnacle, they're the sharpest sportsbook in the world, so we put more weight into their odds, and you can see they have the under. Once you strip out the VIG, the true price on the under is plus 175.56. These are all industry standard formulas that you really need to understand. I mean, this calculator is the core of sports betting. So the fair price on the under 7 is going to be plus 175.56, and we're getting better value on Fliff, plus 185. So this is a profitable bet, right? You're getting odds above the fair odds. You're getting better odds or more value than the fair odds. So that's a profitable bet. I'm not saying this bet is a lock. It's absolutely not a lock, but this is a bet with a mathematical profit margin. You're getting odds above the fair odds, right? It's kind of like if a stockbroker, if all the stockbrokers are telling you, hey, I'll buy this stock for $10, I'll sell it for $11, and then your friend says, hey, I don't want this stock anymore, I'll give it to you for $9, you should jump on that deal. Because all the data points in the market, every stockbroker is saying, hey, I'll buy this stock for $10. So if your friend's letting you buy it for $9, you're getting a no-brainer deal, right? All the stockbrokers are buying it at $10. You're able to buy it from your friend for $9. That's a good deal. So it's no different here. All the sports books have the no VIG odds, the true odds around plus 175.56. But because sports books set lines independently, we see, wow, we're getting really good value on Fliff and able to get this at plus 185. Right? So we're using all these data points in the market. So essentially, as a sharp bettor, you treat every sportsbook as an independent data point of where the line should be set, and you hunt for value. So that's exactly what OddsJam is doing, right? It's scanning the thousands of odds across all these different sportsbooks and pointing out those rare, few betting opportunities where sportsbooks are slipping up. You know, if you think about an investor, it's not like every day they're buying and selling every stock. They zone in on the stocks with value and they take advantage, or the, real estate investments, whatever with value. They zone in on the few plays, the few opportunities that have a lot of value. And it's no different as a sharp bettor. You don't need to bet on every game. You don't need to bet on every player. All you're looking for is those few spots where sportsbooks are slipping up. In this case, it's Fliff, and offering a ton of value. Here we're getting plus 185 when most other books have this around like plus 160, and we're getting plus 185. So you're looking for those few rare spots where sportsbooks are slipping up and offering too much value. And right here, it's going to be under 7 in the Cardinals-Giants game. This is a play you want to go with, 3.61% profit margin. So I'll show you my bet on Fliff, and then we'll jump into some other plays. So here you can see my play on Fliff. I just try to show these. I want to show you guys I'm putting my money where my mouth is. Literally in all these videos, I'm just showing you guys what I bet on. So here's my play on Fliff. So my next positive EV bet is going to be on FanDuel. But before we get into that, let's kind of explain this profit margin, right? So you can see right here, the profit margin, this is also called edge in sports betting. The edge, the profit margin of this bet is 3.61%. So OddsJam sorts bets to show you the highest profit margin plays first. So you can see there's some that are lower profit margin. Obviously, higher profit margin is better. But a lot of people will look at this and they'll be like, oh, 3.61% doesn't seem that good. But what you have to remember is this game's tomorrow. Right? In sports betting, because most games are that day or the next day, your returns are basically daily, right? So if you can earn 3.5% on all your bets over the course of a month, that's an ROI of over 100%, right? So like your returns in sports betting, they compound very quickly because these returns are daily. People always talk about, oh, it's good advice to invest in the stock market. It goes up 8, 9, whatever, 10% a year on average. If you can get 3.5% in a bet, you're basically doubling your bankroll every single month, assuming you're betting consistently. You just have to put in the work to find profitable plays. And we have a bunch of videos about how to back out the profit margin, the edge of your bet. But anyways, my second play is on FanDuel. So again, you want to get as many sportsbooks as possible. More sportsbook accounts More profitable bets, more money in your pocket. So the second line discrepancy is in the Dodgers-Pirates game, 2.48% profit margin, so slightly lower than this play. And I locked it in for the max I could, 111.10. Right? So I say this a lot too, but you want to place as many positive EV bets as you can on a daily basis. So I locked in this bet on FanDuel. I have one on Fliff. So you're essentially like forming your own diversified portfolio of profitable bets. Right? I say this a lot, but you want to place a lot of bets because you're increasing your sample size, right? None of these bets are locks. None of them are guaranteed to win. They're all just plays with an edge. Right? It's kind of like flipping a coin that's 52% to show up on heads. It's a coin that's slightly weighted to show up on heads, so it's going to show up on heads more often in the long run, but it's still 48% to show up tails on any given bet or on any given coin flip. So it's no different in sports betting. These are all plays with a mathematical edge, but you want to place as many bets as possible, right? You want to form a big portfolio of bets, a diversified portfolio of profitable bets that all have an edge. You're essentially like forming your own hedge fund, right? You're forming your own portfolio of bets. They're all profitable. They all have a mathematical edge. Some will win, some will lose, but because all your bets are profitable, they all have an edge. You're using sharp betting strategies. You're going to make money in the long run. Right? Like it's just like flipping a coin that's 52% to show up on heads. It may show up tails a couple times in a row, but over the course of, thousands of coin flips, it's guaranteed basically just due to statistics, due to the law of large numbers, to show up on heads more often. So it's no different in sports betting. You're still going to have some losing streaks as a positive EV bettor. You're still going to lose some bets, but you're guaranteed long term to make money due to the law of large numbers. So this is the second play I went with on FanDuel for 111.10. And then I'll include this spreadsheet in the description, but some people find it helpful just for like calculating the profit margin of your bet. So on Fliff, I placed my bet for $250 and my bet has a 3.61% profit margin. So if you want to quantify that in dollars, the profit margin on my bet is $250 times 3.61%, right? So 903, right? I'm just multiplying these two numbers together. So essentially, if you tried to give me a $5 bill for my bet, I'd tell you no. My bet is worth $9.03 in profit margin. It's a 3.61% profit margin. I bet it for $250, so it's worth $9.03. So I have two bets in, my portfolio, hedge fund Alex, my portfolio of profitable bets, two bets over $10 in profit margin. And essentially what I'm going to do for the rest of the night is go through all these other plays, follow the line movements and continue to find sharp bets on different sports books. Place money on, wager capital on them. I'm going to have my own portfolio of bets for today, just like I do, on PrizePicks. I give out a bunch of bets. Some of them will win, some of them will lose, but I know I'm going to make money long term due to the law of large numbers. So hopefully this video was helpful. Let's make some money.